is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily market analysis show, the markets tomorrow, where we look at what happened during the day in the market and how we can plan for a better trade for the next day. Right. So we had more or less a consolidation move that happened. Let's get in the charts and see the charts. Right. So here we have a small body candle, which is well inside the previous bearish. And it's almost an inside bar from the open and the close perspective, right? So it's closed very much and opened very much inside the previous bearish big candle, and it gives indication that it's consolidation is what's happening. Bank Nifty also a small body is also consolidating. The ranges are the same. It's doing nothing but going up and moving within the same range. Previous consolidation is clear here also. Specifically numbers, right? So it's a gain day. It's a green day. Small body green candle, 0.5% up, 91 points on Nifty. Bank Nifty 127 point gains, 10.31%. That is both green body. Small body green. Intraday it was very volatile in the Bank Nifty. Right, it recovered and then gave up everything, and then did inverted V shapes, and Nifty also recovered after the initial dip, just like Bank Nifty, and it showed more strength than Nifty than Bank Nifty today for some reason, right? So after the initial dip of 1.4%, recovery happened, right? And then it was range bound Nifty. Bank Nifty recovered 1.6%, similar recovery happened, but fell into selling pressure and then fall down. Right, that's what is happening. It was very volatile in Bank Nifty. Double bottom pattern can still be seen, right? This M pattern, right? One top, another top. So that if it's working out on daily time frame, it's bearish indicative. It is still there, and changeability bounce also is possible on the bullish side, right? And it's a support zone. It's a resistance zone which is now taken as a support, and it could bounce up from here. That's how possibilities are in the both indices. And the current zone is a resistance zone. So not roll out that, right? So both bearish and bullishness both are indicative. Overall, if you see, the Nifty is lagging behind the Bank Nifty, because Bank Nifty is definitely above the trend line resistance and the weekly, which you have been referring since long time, right? This is Bank Nifty, right? The breakout is very evident and still intact. But Nifty, look at that. It failed last week. Breakout failed and candle is inside. Weekly basis also, if you see, it's a clear inside bar. So that's where we are. Let's look at the resistance and the support levels, right? On the daily charts, it's marked here. So there's no change in the resistance on the upside. The gap resistance here, 17,861, and then 18,115 is the previous swing high. Similar downside, 17,380. The gap support would be the first support now, and then previous swing low of 17,155 would be the next support, and after that 17,000 rounding number. Bank Nifty similarly no changes. 41,367 would be the first resistance upside, previous swing high. Then another previous swing high at 41,825. Similar downside support would be gap support at 4,300 nearby levels, and then if that's breached, then you have 39,600 nearby levels. Again, another gap support. Then the previous swing low of 39,200. So 39 breaches to be washed out. Similarly, Nifty 17K would need to be washed out in order to get some confirmation, right? So the candle that's formed today, formed in this week by the end of the Friday, would indicate whether we are going downside or not. It's very crucial, because this is clear. The previous week's candle is clearly bearishness, but that's not confirmed. It's confirmed if we have that bearishness, if the price is going below the previous candle low and closing as another bearish candle, then it's a confirmation. Until then, there is every possibility that you can recover as a small retracement, right? But in case of Bank Nifty, unless this 39,000 is breached and it closes inside the channel, we are still bullish. Bollinger Bands, what do they indicate is, right, on the daily time frame is what we see, right? Nifty is showing consolidation. The bands have contracted, or the Bank Nifty has, although not fully, but Nifty, it's very much evident that it is consolidating and it is having a bearish touch, bearish bias, because it's still below the moving average, median value of the Bollinger Bands. Right? Nifty, it has started contracting, but not fully contracted. Right? You can see that the bands have not taken a turn. That could happen if some more dip is happening. Then we can, and the moving average is not breached also on the Bollinger Bands. Momentum wise, and Nifty has slipped into the sideways zones, Bank Nifty maintains the bullishness. Right? Trend wise, Nifty has crossed out to the bear zones, but Bank Nifty is maintaining the bull zones. Right? So that's what your Bank Nifty is still trend wise and momentum wise stronger than the Nifty. VIX has spiked again 19.9, small, but 19.94 is very close to 20. Several times it went beyond 20 today. So it has to be extremely cautious when it comes to trading instruments like options, derivatives, etc. Moving on, the futures open interest letter, if you see short covering build up, which is bullish in the Nifty, and the long bit of bullish again is what you see in the futures open interest. Options open interest, the range is formed now. Friday it is not clear. Now there's some clarity. 17,500 is the support, and the highest put rating is seen there, and 18,000 is the highest resistance, highest number of call rating is seen there. Similarly, 40,000 and 42,000 is the range for the Bank Nifty. This is for the September 22nd weekly expiry, and the put call ratios is improved. Yesterday it was 0.4, now 0.7 and 7.8, but still not bullish enough. But heading towards bullishness is what it indicates. So PCR looks fine, not bad. Price action has come troubles. Trend and momentum has troubles only for the Nifty. That's how it is. Sectoral elbows, if you see auto and FMCG perform, metal and reality did not perform. So metal is the only sector that continues to be in the bullish zones from the momentum perspective. IT and pharma in the bear zones in the short term momentum perspective. So it's something. Stay out of IT pharma, and probably some gains can be made on metal if the reach of 60 RSI is not happening. Heavyweights, if we consider ICICI Bank did not perform. It is the most performing stock on the heavyweights, and that did not perform, but HDFC and Infi and TCS performed today. Not big, but no, performed well as comparatively. All of the others heavyweights were flat. ICICI Bank still maintaining the bullishness. Only stock in the heavyweights that maintains the bullishness. Infinity is still in the bear zones. Infinity, the two heavyweights which is in the bear zones. Others are still flat. No institutional buying, selling. There is some positive news that 312 crores of buying has happened from the Fyers. So Fyers had been selling last 3 days now. This is a relief. At least they're not selling. Days at the same time so little, less than 100 crores. So institutions are not probably they're waiting for the event to react to it, buying or selling for the Fed event that happens, right? That's what we can understand, right? So institutions are no issues, but crude oil sale also is cooled off less than 84, which is fine. It is at a trend line, so consolidating at the bottom of the trend line channel. This is the trouble. The dollar is a trouble. Dollar keeps on rising and scaling the 110 nearby levels of 20-year highs, and USD INR also is not looking great. In rupees, the weakest levels. Just want to validate the USD INR levels. Yeah, it's 9.71. It's not much. Yeah. It's rising in 7 months, so it is maintained below the 80 obviously by the central bank intervention. But yeah, dollar rising, dollar index rising up and up every day is wouldn't back the economy, and there's no cool up that's happening there. Yeah. But gold is falling, breaching the support and falling, breaching this support, and it's in the bearish momentum actually. Gold is falling because of dollar spiking up. And SGS is green as of now, US India is red as of now. We'll have to see all this in the pre-market tomorrow morning, but US market is in trouble. We have bearishness there. Let's just quickly look at the charts, right? This is what we are seeing, right? So we can clearly see that there is a breach of a trend line channel that's coming from the COVID low, right? This particular trend line. That's breached now, falling down. So it could mean that it could go up to this 29,500 kind of levels. 600, 29,500, 600 kind of levels. This is the Dow Jones index that we are seeing. So that fall may be evident, right? Maybe happening slowly or probably in the Wednesday itself, or you don't know how it's going to happen, but it's a big move and a big fall that's happening. Then that day the market, regardless of all of technical analysis, is most likely to react. There are days where it does not react also, but big moves up or down happens, or market do react. because it's a mother market, so obviously we can't ignore that for long. Although we have done that because of the strength in our economy, there is every probability of that. And so you have to be cautious. That's all. So there is trouble in the U.S. market and trouble in the dollar getting rising. Only relief is the crude oil. The major event is this Wednesday, 21st September, has its Fed interest rate decision that's coming out. So those expiry will be very volatile. So it's two stock picks. One is Piramal, and that's on the short side, and ITC on the long side. Let's see ITC charts on the long. ITC is breaking out of a very long rounding pattern, right? So breakout is confirmed. It may be going slow, but very bullish candle is what you see here. Wide range bullish daily candle, right? Very wide range. It has engulfed actually 3-4 days of price movements entirely. So retracement is done with beautifully, and then it has moved up. There is a momentum positive reverse divergence also. It's also bullish. So definitely a good swing, swing as well as positional. It's giving a very good dividend payout. So as a positional play, as a long-term bet, as investment, as trading, everything in multi seems to be the holistic stock that's working out, and FMCG sector is also performing. Right? It's also having around a pattern breakout similar to how the stock is. And the short side, Piramal Pharma is not doing good. Right? Piramal Enterprises is bearish on the momentum and the trend. Right? Bear zones it has gone into. And also on the weekly, if you look that, you can see a head and shoulder pattern. Head and shoulder could break out, and then a big moves of 600, 500 points downfall can happen at least. That is very likely if this breach is confirmed. It's not confirmed. It's on a weekly, but it may take time. But head and shoulder pattern bearishness is seen in the Piramal. So that's a short side call, Piramal, and IDC alongside. Now to wrap up all of this for tomorrow, that's September 20th, Tuesday, the market view that I have is mild bearishness and a sideways neutral view combined. Right? It could go a little more bearish, a little more downfall can happen, but overall we are just doing sideways movement ahead of the event that's coming out, right, on Wednesday or from the Fed side. And that's Thursday will be the day that our markets may be reacting. So basically, what happened today is consolidation, nothing but after 2 days a big fall, 600 points fall in 2 days. Today it consolidated naturally, right? So that is what is happening. But bearish bias is there from the Nifty definitely because its 20 moving average is breached and not recovered yet. Then momentum and trend is caused over the bear zones. Momentum is slipped in the sideways. M pattern trouble is there. Trend line weekly resistance could not be reached. All these are negatives on this one, but at the same time, Bank Nifty is strong and intact. Right, with all of this in the positive side. VIX is very high, is a big worry. Of course, that's unsold. Diesel is reflecting there. So that's why I kept a mild bearish. Otherwise, consolidation for a few days before exploding is what I would look for. Bollinger Bands also indicate the sideways movement. Right. So that's what maybe if that helps you to frame your market view for the next day and your trade plan in some way. If that helps, then please consider hitting the like button and sharing to maximum, and subscribe please if you're not done that. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.